It's really hard to find someone on Wall Street right now who is not bullish on Nvidia, given its contribution to generative AI. And today's AI conference, which is happening virtually, it continues to show how it's capitalizing on this trend while also becoming a cloud-centric service firm. So no longer just a semiconductor chip name. CEO Jensen Huang showcased a new platform for building and operating hyper-realistic virtual worlds. You're seeing just a snippet from the conference on your screen right now. And this shows how customers will use Nvidia DGX supercomputers, that's what they're called, to train their own advanced models for generative AI. Jensen Huang saying, quote, "We are announcing Nvidia DGX cloud partnerships with Microsoft Azure, Google, and Oracle to bring these supercomputers to every company instantly from a browser." And he also went on to say that Nvidia is going to be partnering with Medtronic, a healthcare tech provider, to build an AI platform for software-defined medical devices. This is really important because these partnerships mean all of these companies and users will be able to access these supercomputers from just a regular web browser. There are, of course, a lot of other announcements, but the main one's a new GPU and then a new lithography capabilities that will help make an even more powerful 2-nanometer semiconductor. And it would be used by TSMC, ASML, Synopsys. And this is important because it further entrenches Nvidia into the semiconductor manufacturing supply chain. And the stock right now is moving slightly higher after the keynote was given at 11 a.m. Eastern, but it's already run up, what, 76% year to date versus the SOX ETF that you're seeing on your screen, which is only up about 22%. Keep in mind, the company itself is on track for its best quarter since 2003. So the generative AI trend shows that Nvidia is at the forefront and investors love it.
All right, Christina, thanks. Christina Partsinevelis. By the way, Nvidia CEO Jensen Huang will be on Mad Money tonight at 6 p.m. Eastern Time. Josh owns Nvidia. Should we care about valuation when it comes to Nvidia? Or do you say, you know what, AI is so big, AI is in the right spot, it's the picks and shovels of AI, so therefore you buy it?
I'm in my 8th year as a shareholder in this name, and never once has it been a quote-unquote cheap stock on the basis of price-earnings ratio. Never, not even one time. So why is that? Well, sometimes there are things that investors are paying attention to beyond just how much net income can be pulled to the bottom line in any 12-month period. And this is one of those times, and I don't mean that to say who cares about the valuation, pay anything. I think if you look at the potential revenue growth here, which ultimately becomes earnings, and you understand that 80% of the market for anything to do with AI runs through Nvidia's GPUs and software platform, then you get why people are, quote-unquote, overpaying for the stock. So, yeah, it's expensive. It always has been. Actually, it's more expensive now than it has been for most of the time I've been a shareholder. But arguably, it's never been a more important company for what's coming next. And if you think ChatGPT-4 is a big deal because it could do your homework for you, wait till these programs start enabling us to cure cancer. The things that are coming in the next 2, 5, 10 years are going to blow your mind. Is Nvidia the only way to make money? Is it definitely the best play on AI forever? I would not say that. I would just say at the moment, it's become a must-own stock within tech and within growth. And you'll have volatility, you'll have drawdowns, but the buyers are going to keep showing up so long as they maintain the hegemony that they currently enjoy.
If you think a recession is in the cards, can you be invested in such a cyclical area of the markets? Even if you believe in AI and ChatGPT and blah, blah, blah.
If you accept that part of the deal with owning this stock has been 30 and 40% drawdowns on a regular basis. Not everybody is willing to make that deal with themselves.
Right.
You have to accept that this is absolutely going to have heart-wrenching moments. Steph, what do you think?
Well, if you go into a recession, this stock and these stocks will be under pressure. There's no question about it. That's what's been so interesting because starting last summer, they actually started to outperform. They were the leaders. They were the leaders on the way down, and now they've been the leaders on the way up because of all this exciting end market technology and the newness, right? So I think you got to pick your spots. That's why I'm not in Nvidia. I've missed it, but I am in Broadcom. They do have AI exposure. I am in Lam Research. Both of those stocks trade at 14, 15 times forward estimates.
Tech, though, like Nvidia, but a bigger story to tell about tech. It's the only sector that's green this year. I don't even think this is like. I'm sorry. I don't even think people understand. There's a reason. Nvidia doesn't need to go to the bank and borrow money. Apple doesn't either.
Right.
Google doesn't either. There's a really big component to the strength in tech that has nothing to do with AI and has a lot to do with companies that have the wherewithal to survive if we have a financial crisis / economic downturn.
Well, that's why we've seen the Nasdaq up 5%
Let's
during
get
this
Jim
bank
in on this.
meltdown.
I'll make this really quick.
Thanks for running the show. Hey, Josh, thanks for running the show. I'm gonna walk off the set now because apparently you're like, hey, Steph, what do you think? Jim,
Look,
what do you think?
this is really simple. You made a great point. I'm going to rephrase it.
Maybe we should tell you and you that we should go to break. What do you
rephrase a
think?
point you made.
Go ahead,
if
Jim.
you want return like Nvidia has given Josh, you've got to accept risk. And you can do it anywhere in your portfolio. I've got stocks in my portfolio that people take shots at, like Cleveland Cliffs is down or Paramount's down. The reward potential from those stocks is so great that you have to live with the volatility. There is no free lunch.
May I go to break, Josh? Thank you.